All right, we're live.
Hey,
Good
everybody.
afternoon. Scott, how are you?
Good, thanks. And you, Peter.
Very good, very good.
Hey,
Let's rock
everybody
and
out
roll.
there in La La Land for this.
Yep, welcome to Friday. Scott, thank you so much for taking over solo last week. Much appreciated. I was not able to make the webinar.
I hope that that was of benefit to all, because it was a piece that I look forward to doing on the weekends or the Fridays when we have a month end. It is a good review.
Yeah, I agree. It was good. It was very good. And Scott, we should probably tell them we're working on some like afternoon options content, right, for Squawk Box.
Absolutely.
So Scott's going to be coming on some select afternoons soon, where he'll be in the beginning. It'll be he and I together, but then Scott will handle it himself. But it's going to be slightly different from the morning show. There will still be the same, internals on the quarters and the basics, and obviously we'll be abreast of what's going on market-wise and trade ideas and whatnot. But Scott's going to bring in some options content, more like a free training. So you can think of like those afternoons at Squawk Box would be more like a webinar, which would be cool. So we're working on that and probably launch that right after the new year, I guess, right?
I would think so.
I would think so. I mean, we've already run a bunch of tests on them. We've had you on the phone there many times, but this will be more direct. Instead of just having Scott call in, he'll take the reins himself. And I guess maybe I'll be the calling guest. I'll be calling into you. So yeah. All right, let's rock and roll. Exactly. All right, I'm going to switch screen sharing on, and let's start with technicals. Let's go top down and start with technicals first, like we always should. And I'm going to give out a few, if kind of scenarios of things that I'm thinking of going forward. I do think that we're going to see a correction in January. I'm going to put that right out there right now. It's not that the market's been up so much. It's the manner in which the market has been up. I think the market holds until January. I've been saying this on Squawk Box earlier today, those of you that were there. I think that the market there will probably be not a whole bunch of sellers for tax reasons. I think they'll hold on to winners into January, and then they'll be looking to liquidate. And my main concern, and this is something Brad has been following very closely, so kudos to Brad, is that there are now 12 or 13 VPOCs below us. And then at the same time, when we look at the monthly chart of the S&P, we are about to complete 13 straight months of one-time framing. I've already talked about this a lot. If you don't understand what one-time framing is, you can email me at Ask the Shadow. I'll explain, but very quick, just the basics. One-time framing in profile. It doesn't matter the time frame. This is on a monthly, but it can happen even on the 30-minute bars of the developing market profile for the day. We have not crossed below the low of the prior period at all in 13 periods. And as you can see, just from going back to the beginning of 09, which is when this rally started, correct? March of 09 is when the rally began. And here's where we are now in December of 2017. So we're a long way. I mean, we're 8 straight years here almost, right? And in this whole time, there has never been one situation like this where we've one-time framed this long, right? Look at how long can you go before you trade below the prior month's low. Well, here's a long one, 1, 2, 3, 4, 5 months, and then you break, right? Here's a long one, 1, 2, 3. Oh, you only lasted 3 months, right? There's the one-time framing break. You took it out, right? Look at this one, 1, 2, 3, 4, 5, 6, boom. And on the 7th month, you take it out. So this is really, really rare. Look at this one here, 1, 2, 3. 2 months, on the 3rd month, you take it out. Then you go 1, 2, 3. On the 4th month, you take it out. You go another month inside, and this month you take it out big time, right? Chop, 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 bottoming tail hammer. Even with this bottom right here, rally, hold, one-time framing. Here, you break one-time framing, but only by a tiny bit, and then boom. 3rd or 4th month, right there, you break one-time framing. Here again, one-time framing 1 month, break, hold, break again, and here 13 months without a break. So this is really, really unprecedented. And I want everybody to really take this to heart. Yeah, exactly. Ed in San Jose. But it's different this time, right? We should be buying in January, right? This time it's different, right? If you guys listen to my Squawk Box rant this morning about this time it's different. you'll understand what Ed's talking about, right? I want you guys to focus on the fact that what I'm talking about is very objective. There's so many people that have been calling for this market to go lower, but they don't really give you any concrete reasons like this. They don't know what a VPOC is, and they don't know what one time framing is. They just think that it's up because it's been up too long, right? And we know that there's some people that have been shorting it for the last 4, 5, 6 years, right? And why were they shorting it? Oh, it's just up. It's just up. Why should I sell futures here? I'll just do it. You know, it's because they're up a bit, right? Dead wrong. Just drives me insane. You know. All right. So that's the situation on the monthly on SPX. So we're probably going to hold into December, and then we'll be looking for a turnaround in January. Now, one of the best things that could happen, I think, as far as pattern in December, excuse me, is that we don't have an expansion of range to the upside and that we just have a doji. Usually when you have a monthly doji, it's a sign of a long pause where the market is struggling at a high. It would make kind of a hanging man pattern, and it would probably set up the January drop even more if it's a doji. I'm just saying, you would think it'll be easier if we rally up over 2,700. I actually don't think so. A lot of times in the S&P, and you've seen this happen, you'll go sideways. You won't have an excess high. Everybody will be thinking there should be an excess high, and the ES will just fall out of bed like crazy. That happens all the time. Remember that the ES is the one market that more than any other can kind of thumb its nose at these market profile principles, and it can correct without an excess high. That's what I should say, because it generally does follow profile principles, but the ES is the one market that often will correct without making an excess high, right? It'll just turn. So let's see what happens. All right, that's SPX. Let's take just a quick look at the monthlies on NDX. I don't want to waste too much time. But notice here, we have not been, this is lower here, so we have not been one time framing as long, but almost if you kind of ignore this little equal low here, remember, if it's an equal low or it's just a little bit, generally the one time framing is still intact. The rule is in the ES, when you look at daily distributions on the ES, if the ES comes down 2 ticks below the prior period low, that's still one time framing. So technically, we could say the NASDAQ is still one time frame because this is, you know, you don't measure the NDX in ticks, but it's just a tiny bit. But regardless, notice that here you're starting to waffle and go sideways, and it could be the same situation where we would be looking at, say, 62.31 as a short in the NDX to take it down a little bit. All right. And last but not least, Russell, which had a huge resurgence after a big month down. This is really kind of a different situation because a lot of the froth was taken out here. Small caps don't really, you know, act right to me. They do some weird things. So I'm just kind of putting it up there to show. But the Russell does not have the whole one-time framing thing. All right. Okay. Let's get into more near-term stuff. Let's look at the SPX. We probably could have been more aggressive as far as weekly options on this pullback here because I called it pretty much dead right in the blog, but we were not very aggressive with new stuff. I was looking and looking and looking, and I just couldn't find pricing that I liked. I did not like the way options were pricing out for risk reversal to the upside. And one of the reasons that we probably didn't is because we didn't really have a major expansion of volatility to the downside, and stocks didn't really come in that much. A lot of stocks that we would be looking to play came in a little, but not much. So the last couple of days, yes, haven't really been long, but I'm kind of okay with it. We have those couple things on in Amazon, which were kind of long shots to see if they go and if Amazon would go lower or higher in either direction. We can still maybe adjust one of them. We'll see. But for now, I'm still just kind of keeping powder dry, and I'm looking for stuff. So that's SPX. But I really want to focus on the QQQs, which I think gave a signal, and that's what was said in the